All right, so we got to the end of a month, and a pretty significant month from a technical perspective. So I'm going to talk about how, what drove price action over this course of this very strong April. How strong was it from a historical standpoint, and what does that strength mean going into the typical sell in May timeframe, and when can we expect to be, for the bearishness to occur during what most people expect to be, a 6 month period, especially after such a strong 6 month period of gains over this next 6 month period, which is traditionally weaker. What is it going to look like there, and when are we going to see? So we're going to break that down based off what we're seeing on the monthly candles. So that's a benefit of doing these videos on the monthly charts at the end of the month. We're also going to talk about kind of what's driving the price action with a very significant move in the dollar today and what that means. So we're going to take a look at that. And then our trade idea is a stock, which again is the kind of trade we've been doing a lot lately because that's the kind of market we're in. We're going to talk about why and how it aligns with this particular stock that we do for our trade. So let's go ahead and get started. Today is Friday, April the 30th, 2021. This is the Market Outlook from MarketScholars.com. My name is David Settle. All right, well, let's start off taking a look at the S&P 500 with the Market Forecast Indicator. As you can see, we do have a little bit of a drop finishing into the end of the week. We'll move this back up here. Into the end of the week here. But you notice we didn't close below any of this week's lows. So we held. And it was a pretty tight range. Besides yesterday's move, if you can see above my horizontal line there, that was the high of the week. It was high today after the gap down. And we pretty much traded in a tight range outside of that little burst, the gap up and the close up yesterday after filling in that gap. Needless to say, very, very tight range there. The intermediate posture is still strongly bullish. Market sentiment still strongly bullish. The near-term line finished this near-term run, so that's why I had it. It was a very long near-term rally here, a very shallow exhale. As you saw, it didn't even get to, as I had it there originally, it didn't even get to the 23% retracement. That's how shallow an exhale we had during that near-term decline. Then we had this new near-term rally here. New near-term rally that is already done. So it was a very shallow near-term move to the upside, followed by preceded by a very shallow near-term exhale that was preceded by a very long inhale. So that's very, very typical to get outsized moves. When you don't get the typical exhale, when you get very shallow, it's hard. I mean, again, it's like breathing, right? You take a deep breath in. Usually you follow that with a deep exhale. But if you only follow with a shallow exhale and then go right back to an inhale, it's hard to get another really big inhale. So, that's not necessarily the case with what we had here. We had a pretty good run. We had this exhale. Really, you can kind of see the way this is kind of broken up. We've only had one intermediate pullback legitimately since the COVID low point, which is that one there. We came close here and we came close there. In fact, the NASDAQ, remember, did. So you could probably break up, 1, 2, 3, and then now a fourth intermediate run during this entire time if you count those two quasi-intermediate pullbacks. So the intermediate line dropped, didn't quite get below 50 there. It dropped over here and didn't quite get below 50 either. I think we got to... where did we get to over here? 51, 50.8. So you kind of get the idea that they were close. They were close enough to bring market sentiment down. Market sentiment rolled over right there. Market sentiment rolled over right there. But they weren't, enough to get dark pink shading and a red line. In fact, both of them pretty much got light pink shading and a yellow line at that time. But both of them, that hit the 23% retracement. That hit the 23% retracement at the time. So they were not, both of them knocking on the door, just not quite there. Again, about as noisy of a move as you could possibly have without it technically being considered a pullback. Whereas this was as shallow of an intermediate pullback that you could possibly have while still being considered an intermediate pullback by all the indicators that we look at here. So kind of gives you an idea that they've had really good bullish runs and really not very significant exhales at all. That's kind of in the nature of the type of environment we're on. Again, you could probably go back to since the beginning of the S&P, back to what, the late 50s. This is probably the environment where we've had the biggest combination of fiscal and monetary combination that we've ever seen, especially at all-time highs. But you consider that we essentially are doing the big blast to the balance sheet that you saw with QE1 coming out of the 2009 low point, but combine that with that big, strong, indefinite asset purchase program of QE3 that we had from the end of 2012, that tapered in 2014, that finished in October. So almost a 2-year run there. Combine that, QE3, with what we saw in QE1, and then all of the fiscal accommodation that we're getting, that we also kind of saw in 2009, with interest rates at 0%. That kind of gives you an idea of why we can't get a really good exhale. Like why they're so very shallow, and we continue to have these very strong runs to the upside with basically one big long market sentiment run. The market sentiment line did dip over here below 50, but obviously, like I said, did not get below the 23% mark. No, barely got below the 23% mark of that intermediate pullback that we had going on in that, in September and October. You look at the NASDAQ composite, you can see the near-term decline had already started. And again, we finished at the low of the week. The Russell 2000 was very, very sideways for most of the week, had a gap up on Monday. We essentially reversed that. So, short near-term run that we had, it's already back down. It's not as bad as it was. We were a little bit more extreme earlier, but still a pretty bearish drop, and the intermediate line is above 60, so that's a good bullish kind of breakout pattern, especially getting above the market sentiment line. The question is whether or not that's actually going to hold, and as of right now, especially if it doesn't get above 80, would be considered a pretty bearish peak on the intermediate line if we roll over from here. So very important next week. I don't think that we're starting the intermediate exhale next week, but it's a very, very important week. That we don't bounce up. This is a bullish intermediate confirmation signal because the posture is still barely strongly bullish. That it's still rising slightly with an oversold momentum line, near-term line below 50. So we should bounce off of this. You expect that we will, but if it and I think we'll get another near-term run or two. But if we don't, especially when you look at go back to the S&P because this is the end of the month. So you look at the monthly chart for the S&P 500, and you can see big cluster. In fact, I kind of pulled this up here, the Hakinyashi differential here. Basically, it measures the size of the Hakinyashi candle on the weekly chart. And again, it is, it's not relative. This is on an absolute basis, so you have to compare it to the actual index itself. So for an example, when you look at some of these other peaks, like this peak in 2018, just to kind of give you some context, and we all know how extreme that peak was, that month of January 2018, that started, that was so parabolic there. The Hakinyashi candle was 158.34 points. That's that green number right there, 158.34. And you divide that by where we were trading at the time. The close, which is an average price of the high, low, open, and close for the actual monthly candle. So the Hakinyashi close, let's go to the Hakinyashi. Here, the Hakinyashi close was 27.65.69. So let's see, 27 divided by 27.65, what did I say, 69. So that means that the size of this body was about over 5.5% of where the average price was during that month. You can look at today, and you can see we're at, instead of 158 points, we're at 290 points, 290.598. Divide that by the Hakinyashi close, which is way up here, 40.96.38. You can see the actual close was 41.81. So. But that is a 7%. That means the candle here is 7% of where the price was, the average price during the month. That's a very, very large move. And we all know how bullish that, how parabolic we kind of went there. We're not quite going as parabolic, but a very strong month nonetheless. Even just looking at some of these other peaks here, because these are some high numbers as well. I mean, that was the highest at 311 points. 311 divided by the average price there was 33.96.97, and you can see that was at 9%. Then over here we had 296, 197 divided by the average price of 36.98.89, and that was at 8%. And of course, as you saw, we were pretty close to 8% now with this month. So very, very high levels. And what ended up happening, again, after the month of August of 2020, and then after the month of December of 2020. So January of 21 and September of 20, if you look at the kind of price moves you have, so here is August. There's the end of August. It's August 31st right there. That's August. This is what happened in September. Look how volatility picked up after a really strong month in August. Here is December going into there's December 31st right there. This one. That's December 31st. Look at what happened in January and into February. Some more volatility that we didn't see at all in December. So not as much, but you can see a pickup in the size of the candles here, both to the downside and to the upside. And because remember, when you have your kind of volatility moves, they tend to occur. You have your biggest up moves during those times as well, a lot bigger, as you can see, than during bullish moves. With the monthly candle as big as it was this month, and no less finishing with a cluster, and we did get a cluster in December too. We did not get a cluster in, let's see, there was July. We got a cluster, let's see, over here. Sorry, this would be August right there. We didn't get a cluster in August. We did get a cluster back here in November of 19, as well as July of 19 going into those COVID lows. So kind of a double cluster there. Getting a double cluster now on this current intermediate run. To get two clusters on one intermediate run is a pretty significant move. Just kind of shows just how strong the move was. And also, as we've talked about before, how far up above that, in this case, would be a 30-month moving average, since we're on a monthly chart. To give you some context as to how significant, how high that is, if I were to go back to all the way to 1957 to see how many other times we've been above the 30-month moving average by 32%. So now we can look at this as a closing basis. So ended up being 32.29. Here, let's edit that to 32.29. So again, you can see in July of 2018 or January of 2018 right there, we weren't this high. And you can see 2011, and when we got that cluster, we weren't this high. We haven't been this high since the late 90s. And we still continue to really push higher, and I still think we actually have a really good chance for this type of move over the next year or two going forward as well. Same thing with the 86 and 87. You can see once we got these clusters and we got up this far above the moving average, we had some volatility, sideways action for the rest of 86 before a really strong run in the 87 before Black Monday hit there. And then, like I said, no other time we've been this far up above the 30-day moving average. So, we finished the month on a high note, a little bit of a pullback here, but not, very, very noisy. As I mentioned in my class today, my technical analysis class, this kind of move, that kind of gap is not significant. It's just noise, as we all know. But needless to say, we finished the month pretty strong. Here, let's go to some of these other charts. You can see from a long-term standpoint here, the PPO between the 10 and the 40-week moving average is really high. We're well up above that 50. Just look at how far above we are right now. The 10-week exponential moving average. So we'll go 1 and we'll go 10 here and hit yes on this. It kind of gives you an idea, over 3.25% above the orange line, essentially. that's a pretty high level. Again, we're coming off of a peak that is a pretty high peak compared to again compared to 2018, which a lot of people have in their minds. That's how bullish we were over the last couple of weeks. This would be on a weekly chart. So, finishing very strong. If you look at the DMI, we're still rising on the ADX even with today's little loss here. A very low negative directional index that we haven't seen for a while going into that August peak. But of course, that weekly chart is something I've been kind of watching, and it's been very, very strong there as well. With the type of move that we're getting, you look at the Bollinger Bands. Obviously, building up a pretty decent volume node in this area, still in the upper quartile, still very bullish on the daily. Of course, I wanted to look at the weekly chart, and we're very bullish on the weekly chart. So that's why I say it's going to be really hard for us to say, oh, we're going to really start tanking now, because it's kind of hard to tank from very strong trends. You look at the Ichimoku cloud on the daily, very strong trend there. On the weekly, even stronger, right? That's about this peak on the trend quality is about as high as it gets. We were this high going into 2018 when we were crazy bullish. Very, very similar environment from a technical standpoint, from a trend strength standpoint. If you go back 20 years, you can kind of see there, again, 2013 and the 14, this was QE3, right? It started in the fourth quarter of 2012 and ended in the fourth quarter of 2014. That's QE3. So we are right now at 16 there on this indicator, about as high as we were right smack dab in the middle of 2014, actually while we were tapering. We had already started to taper there, and you can see some other periods where we had relatively strong numbers here. Just to kind of give you an idea of the strength of the 1999 to 2000 period for this trend quality indicator. That's where we were in 98, right? So we were very, very strongly bullish, and the same thing again in 99, about to really, really high levels. So we can be this strongly bullish, and it does, it's kind of hard to break that trend without some kind of catalyst that will change things up a little bit. Here is the weekly chart, RSI, still up above 70, just like we were in the beginning of 2020, and even worse in 18. So again, we're not nearly as extreme as we were going into 18. Remember, we are in a monthly candle, so if you look at the monthly RSI, it's also above 70. And monthly RSI can get above 70 and stay above 70 for a while, so we're just barely crossing above 70, and we're still above 100. So it kind of shows you just kind of the strength of the trend that we are on right now, and again, how hard it is to break, right? Even if we do get some little noise here on a long-term level, even if we do get a 38% retracement on the market sentiment level, but in the next month or two, which I fully expect actually that we will get by the end of May into June. I expect June will probably be the worst month, out of this next, by the end of the summer. I kind of expect June will be probably the worst month out of May, June, July, and August. But I don't expect it to be like earth-shattering bad. I just expect that's where the weakness will be, the volatility will be, with the rest of the period being either flat at worst or bouncing back up by the end of the summer pretty easily. So that's kind of my expectations there, and this kind of shows you, even with that kind of a decline, which would be kind of like what we saw in early 2018, it wouldn't be trend changing, right? And I wouldn't expect it to change things up here either, from a long-term basis, of course. Looking at today's trading range, as I told you, we stayed in the tight range that we had most of the week. This range is going to be the 4-week range is going to be really tightening up very quickly if we don't fill in that gap and get a new high next week. And I think there's a good chance that we can get new highs next week, just like we talked about getting new highs this week. I think we'll get another new high on the next near-term rally or two going into next week. Obviously, the volume today finally picked up a little bit. But the last couple of days has picked up back up to a little bit above average at 85 million. The trading range did not pick up, though. So between yesterday's range of 4.25 points, today's range back to only 2 points. Keep in mind that gap. Then what that means is we still have a very low ATR, below 1%, but not really extending down. And moving average might be starting to of the volume might start to be bottoming out as well. So, and then one last thing, the VIX here, you can see it jumped up, but again up to 85%. So we're kind of one of the first Fridays where we saw an increase in volatility going into the end of the weekend, instead of the last few Fridays where it's been a decline going into the end of the weekend. So that'll be, interesting to see what happens going into Monday, where we've really bounced up every time. If we'll bounce back up again here, or we'll bounce back down, which I think actually is more likely on Monday. So, all right, to summarize my technical outlook then, obviously we're still, despite the noise to finish the week and the very sideways trend, that's the kind of near-term runs I expect that we'll get over the next few weeks as we kind of wrap this up, right? Wrap up this really mature intermediate run, and for that matter now, a pretty darn mature market sentiment run coming off of the March 2020 low point. So, there's not going to be super outsized moves, especially after a very strong month of April that we had. We've seen this type of month in the past create volatility. We've seen the type of volatility moves over the past couple of years have been very shallow. So we're not expecting anything too significant once we do get one, even if it is ultimately a market sentiment pullback. Could end up being one of our weaker market sentiment pullbacks that we've had. Again, considering the accommodative environment that we've been in. So will not be necessarily end of the world. Might be uncomfortable for people that might be a little overloaded in terms of risk appetite right now and speculative with speculative trades, but won't be a big deal for most everybody who at least who's been watching these videos, and most of our market scholars as well. So that's kind of my expectation. So a little bit of weakness into the end of the week this week. I fully expect it will probably bounce back up next week. I think that odds are higher that we'll bounce up. Just don't expect it to bounce up a lot. Don't expect another April to come in May. But I also don't think like the sell in May and go away is going to produce a big worst case scenario for May either. In fact, I think our worst month of selling, and again, I'm not talking about fall off the cliff either, but I think our worst month over the next so many will probably be in June once we get through May. I expect it will kind of be a little choppy in May, smaller range what we saw in April, but still ultimately probably to the upside or close to the top of this range of April before we finally get more volatility than what we've seen here lately. So what do you think? Do you agree with that assessment? Do you disagree? Let me know in the comment section down below. Why? What indicators or charts are you looking at to tell you why you're either a lot more bullish than I am or a lot more bearish than I am? All right, before we look at some other charts, I invite you to subscribe to our YouTube channel. Mouse over this icon here in the bottom right corner of your screen. Hit the red subscribe button that pops out. There's also one down below the video if you're watching us on YouTube. That notifies you when our videos are posted. Also, while you're down there, hit that thumbs up icon. That tells us two things. Number one, you liked our video today. Number two, you want us to do another video again tomorrow or on Monday. Quick way to give us feedback if you like our videos. If you don't like our videos, of course, you don't have to click on anything. But if you do like our videos and you want to let us know, you can do it with one click right now while you're watching. Also, while you're down there, comment, as I said before, on anything that stood out to you. What questions or comments do you have? What did you get out of the video? Why should other people watch it as they come to us for the first time? Post there in the comment section. Join our website at marketscholars.com. There's a link popping out up there in the top right corner of your screen. Click on that link to subscribe to our site for free. Follow me on Twitter for more content in between the videos from day to day. There's my handle right here at DavidSettle42. And join our Market Outlook Facebook group that we've created. All right, if you're watching us on our blog, come check us out over here on the right. You can see the Market Outlook live videos I always talk about. These are where I review all the old trades that we still are in from old Market Outlook videos. We keep talking about them until we close them. That's the difference between me and like other people when they tell you about trades. Then you just don't hear about those trades until either they're big winners and you hear about them a lot, or you just don't hear about them at all if they didn't make any money. So we continue to watch all our trade ideas all the way until the time that we close them. And we talk about when and why we should close them here in these Market Outlook videos. So, or Market Outlook Lives. I do them on YouTube at 3:30 Eastern Time on the days I do the Market Outlook. You can get to it here or by mousing over and click on Market Outlook Live Trade Review. Here's our upcoming trading rooms. All of our paid subscribers, whether you're monthly or premium subscribers, get access to both of these, our live videos as well as the Market Outlook Live as well as the trading rooms. Our premium subscribers, of course, get access to more than just that, including our Q&A sessions, our class forums, as well as our premium tools and resources like the charts that we use in these videos here. Come down here, click on this heart. It opens up a new tab. Hit this like button right there. Also come over here, click on this thumbs up icon, opens up another new tab. Hit that like button here as well eventually. There we go. Again, that really helps us out because the more you do that, the more engagements these posts have, the more people will see our content. We didn't even get to 100 on this time. So we really appreciate those who do click on those likes. It helps us out. It also helps you out because Twitter and Facebook will promote content in your timelines from the accounts that you engage with the most. So we try to make it really easy for you to engage with us right here. All right, now let's talk about what's driving the price action today. You can tell that we are in an inflationary environment because real estate's up and commodities are up. Both of these prices or assets, kind of hard assets, so to speak, are doing very, very well. The S&P 500 is doing well this over a 3-month period. If you just look at the month of April here, so we'll go, let's just go to April the 1st. Start with April the 1st. We'll go to April the 30th. Here is the 10-minute chart. That's what did really well over the course of the month as well. The commodities were up 8%. Real estate's up 8%. The Qs had a really good month, off their highs, but a really good month, up 6% still. Everything else, you can see the big divergence. See how they held their gains. Everything else started to pull back. You had a big drop in emerging markets here late. You had a big drop in small cap stocks here late. Over the last couple of days, you had a big drop in developed market stocks. In fact, if you just look at the last 2 days alone here, so most of this weakness, that's, you can see small caps down. We're almost down 2%. Emerging markets were down 2%. 1.25% for developed markets. Gold was down. Look at the big move up on the dollar, and that kind of got lost in the shuffle today. But the dollar, U.S. dollar, made a significant move, really bouncing up after some really oversold, pretty much since this breakout pattern we had back here on post-April expiration, where you broke above that 23% retracement. And we've just been kind of grinding up higher here. We've pretty much lost almost all of those gains today on the euro, or losses on the U.S. dollar. Kind of one big evening star candlestick pattern. If you count this as the up candle, then your doji, and then your down candle that pretty much matches this up candle that was spread out across 4. That's kind of what that does, and that's a bearish reversal pattern, and very oversold momentum line that you see is much lower than what we've seen during most of this bullish run. The near term line also getting to its lowest level, breaking below 40, not quite to oversold levels, but breaking below 40 there. You can see from a DMI standpoint here, we are so extremely oversold on that, and it's kind of rare for us to get that oversold on the euro. You can see we kind of got that way over here as well. The negative index, it took us a while, but that ended up being, especially with the cluster, ended up being a relative peak. Some more upside, but you can see the bulk of the gap, the big move ended there. That's where the ADX peaked. The ADX appears to have been peaking again right now with the type of rally. So kind of we're going to keep our eyes very closely peeled to this 23% retracement level, because getting back below that would pretty much throw this little breakout and turn into a fake out pattern. So we're going to keep that, watch that, and that's kind of what I actually expect will happen, as bonds seem to be bouncing off the moving average there. So if I go back to the market forecast pattern for bonds appears to be bouncing off its moving average, and gold, a little bit of a downside move today because of the strength in the dollar, but very small range and still hovering around the 23, easily above the moving average. So both these kind of safety trades Little weak, little bit of weakness this week, but still kind of going into the end of the week showing that we're definitely not risk on right now. That's why I say kind of grinding near-term moves before we really fully get quote-unquote risk off. And as I said before, I think if and when we do get more risk off, you'll see this chart here, which is the Qs. You'll probably also see EEM start to outperform against U.S. stocks, but you'll see the Qs come over and start to outperform again versus IWM after this little pullback that it's had. You can see the little drop it had to the 30-day moving average here. Let's just go to a 1-year chart and go back to a long-term chart here, a daily chart. You can see we basically hit the moving average and appear to be bouncing back up above the 8-day, which is still above the 17-day. Everything turning up, MACD histogram turning up, CCI turning up, and RSI all from bullish lows. And again, I expect the bulk of the next bullish move to be at least at the beginning when we have more of a broader exhale in equities. So that's kind of how those are the big important asset classes. Of course, one of the other big important asset classes here lately has been Bitcoin, and that's something we want to keep our eyes on too, as it's been more associated with risk appetite here lately. And it had a really good bullish day today after having some weakness, after having breaking that 23% line, getting this intermediate pullback, very shallow, again intermediate pullback, bouncing back up and looking like it's trying to reclaim that moving average. So if we are going to be bullish for another week or two, then look for this to make a run back up to 65,000 or higher, kind of make some headlines again before it starts to get back, to where, again, during the last couple of weeks, you don't hear about it at all. And that's, you won't hear about Bitcoin very much when it's in its own little intermediate pullback. You can see from a broader standpoint here, very, very high PPL, higher than it got over in 2019 when we had a really strong run. Very, very high 52, very big gap between these two lines, 50 to 200 day, which I expect that ultimately we will fill that in. Again, most likely during a period of risk off type moves. All right, from a sector rotation standpoint, again, looking at how things have been this month, as you can see, for the most part, it's been a financials and energy story. But looking at how things have performed here this month, you can see, again, it was real estate and technology. Technology giving back over the course of this week. In fact, technology really had a bad week. If you take a look at it just this week alone, we'll go to like a 15-minute chart. Technology had the worst performance of the week, down with healthcare, even with all those big tech bellwethers, Apple, Microsoft having great earnings. Communication services with Facebook and Google, not so bad. They had a really good run. Financials had a very good week. Energy, it's kind of like these two big winners over this past 6 month intermediate rally, especially year to date, but over the last 6 months that we've been on this tear, it's been financials and energy, 52 and 72%. It looks like they're kind of making one last push to the upside of gains in terms of momentum trades before they hand the baton to some of these areas down here for them to rotate more into favor. You can kind of see this rotation chart I've shared with you before. If I update this, you can see the energy and financials still very strong relative strengths on a long-term basis, but losing momentum, but not below 100. Utilities, staples, XLRE gaining momentum, but not above with positive relative strength yet necessarily. So it's a process of rotation that we're still kind of working our way through. In fact, if you take a look at the daily rotation, you can see utilities is dropping, staples is already in the red, energy, financials making one last push to the upside, it looks like, on the daily chart, and then rolling over, and then you expect the safety trades to continue their long-term rotation back to the upside. So that's kind of why those two charts there kind of show how we're kind of getting one last push into what has been working so well before these two drop back down, and industrials and materials eventually roll over themselves. All right, for our trade idea of the day, you can see that we put in here before the market closed today. We're going to take a look at Best Buy, BBY. Let's take a look at its market forecast chart here. And you can see, we've had a nice little bullish move, but it looks like we've kind of hit a ceiling that we've had over the last 6 months or so, while the market's been so extremely bullish. But, the bearishness hasn't been too bearish either. I mean, intermediate line's down. If you take a look at the long-term chart for it, you can see we've just basically just converging, not very much of a move one way or the other. If you take a look at the 3 green arrows, the 8 and 17-day are below the moving average, moving down a little bit, but the stochastic is kind of rolling up. You take a look at some of these other indicators like the RSI and CCI in very neutral zones, somewhat bearish in the CCI, but pretty neutral in the RSI. You look at the DMI and the ADX, and you can see we're not getting that much of them, both lines between 20 and 25, so not very much of a move whatsoever, one way or the other. From a Bollinger Band perspective, you can see we're basically centering right around this very strong volume node that's below us, so very strong support level down there. And from an Ichimoku cloud, you can see how noisy things have been, and we're back to very noisy levels, still above the cloud, so good support down there too with the cloud. So you can see the resistance to the upside, very good support to the downside from multiple areas. Of course, that sets us up for doing, from a technical perspective, doing the iron condor. So the trade is to sell the 111 109 put spread, sell the 123 125 call spread for a normal position size, because we don't have to worry about the earnings. There's our break even, so normal position size, getting a pretty decent return on that. And of course the break evens, as you saw on the chart, and here we can even look at it on this chart here, you can kind of see the kind of room we have to work with, right? So there's the high point, the 4-week high, and then we've got some room to the downside where there's some very strong support for it to work below. So the idea is over the next 3 weeks, if we stay in a sideways trend, then we should be able to pocket that return as the market again kind of grinds. And if it grinds to the upside and brings us along up with it, great, as long as it doesn't go up too far, which we don't anticipate. I don't anticipate that it will go up, so we'll be able to take advantage of the choppiness. All right, so that does it for today. You've heard from me now. Now I want to hear from you. Use that link popping out in the top right corner of your screen. That takes you to our Market Outlook forums. Remember, that's for free. You can participate in that forum for free. Any of our subscribers can do that there, and you can be able to interact with other market scholars as well, people who watch these videos. And let's keep this conversation going. Remember to subscribe to our YouTube channel, hit that thumbs up icon, as well as like us on Twitter and Facebook too. Comment on the video. Thank you again for watching. Have a great rest of your weekend, everybody, and we'll see you all on Monday.